Welcome to this week's Market Update, where we review the key developments that shape markets, highlight what drove our recent performance, and look ahead to important events on the horizon. Let's start with what moved markets this past week. Big story is the labor market, which is holding up better than many expected heading into a key week of economic data. The Bloomberg consensus is 55,000 new positions for February, and JP Morgan puts the most likely outcome between 45,000 to 75,000, a range that markets would absorb without major reaction. The real risk is a reading below 45,000, which raises stagflation concerns, while a surprise above 105,000 would be genuinely unexpected. After December's 48,000 and January's rebound to 130,000, Friday will tell us which direction this labor market is truly heading. The bond market has been adjusting expectations for Federal Reserve rate cuts, as rising oil prices linked to Middle East tensions have nudged inflation higher and pushed Treasury yields modestly up. Markets still expect some rate reductions this year, just a bit later than originally anticipated. For our fixed income holdings, this environment offers attractive income today with the potential for price gains when rates eventually ease. On the technology front, Broadcom reported its quarterly earnings after Wednesday's market close, and the results reinforce just how strong the AI chip opportunity remains. 49 out of 51 analysts covering the company have a buy or strong buy rating, with their consensus price target implying over 40% upside. Demand for Broadcom's custom AI chips continues to accelerate as major technology companies race to deploy them, and concerns about clients building chips entirely on their own are widely seen as overstated. This is great news for our semiconductor holdings and reinforces our confidence in the AI infrastructure theme running through our portfolios. Now let's look at what drove our performance over the past week. Amazon was our top performer with a 5.3% gain. Its cloud computing division is capturing surging demand as businesses adopt AI tools, while ongoing efficiency gains are also making its retail business more profitable. Strong returns from two very different businesses give Amazon a resilience that few companies can match, which is exactly why we own it. The consumer discretionary sector was our strongest contributor, led by Booking holdings, rising over 8% alongside Amazon. Global travel demand is holding up well despite higher borrowing costs, and consumers continue gravitating toward dominant digital platforms. Today's environment is rewarding businesses with the best reach and pricing power, which is precisely what our holdings offer. Our momentum strategy was the week's standout performer, as markets rewarded companies with consistent earnings growth and durable competitive advantages. Businesses performing well tend to keep performing well when the trends driving their success stay in place, and Amazon and Booking holdings were our key contributors. Our focus on strong earnings momentum positions our portfolios to keep capturing these returns. Looking ahead, here are the key events we're watching that could shape markets this week. Tuesday brings U.S. existing home sales data, offering a real-time read on consumer confidence in a market still adjusting to higher mortgage rates. When people feel financially secure, they make big commitments, and housing trends provide early signals about economic momentum and opportunities across real estate and financial services. Wednesday's inflation report is one of the most closely watched releases of any month. A softer reading on consumer prices would be welcomed by both stocks and bonds and keep rate cuts on the table. A higher number could trigger near-term volatility. This report has real potential to move markets, and we'll be watching carefully. Friday brings Canada's monthly jobs report, a key input into Bank of Canada policy. With trade uncertainty weighing on business confidence, this data will tell us whether Canadian employees are still growing and hiring. Strong job creation supports consumer spending and reinforces our confidence in our Canadian holdings. Thanks for joining us, and we'll see you next week.